Good morning, everybody, and welcome to this webinar brought to you by Supply Management Insight in partnership with YPO, Public Sector Procurement and Services Specialists. My name is Edward Craig. I'm Head of Content Labs for Supply Management. And in today's webinar, we'll be talking about building efficiency, savings and value with collaborative procurement solutions. We'll focus on procurement collaboration in the field of insurance and risk management. Risk management underpins all procurement decisions, but the pandemic has made the function look at it through a new lens. We'll also discuss the support for public sector organisations to manage current and emerging risks. And to guide us through this subject, I'm very pleased to have a panel of experts with us today. First up, we have Alison. Please introduce yourself, Ali.
Morning, my name's Alison Goodwin. I'm head of the public sector practice at Aon. We are insurance brokers providing services to public sector, and we provide services to all public sector organisations right across the board. Prior to becoming a broker, probably 20 years ago now, I spent approximately 12 years working on the other side of the fence in the public sector as a risk manager.
Great, thank you very much, Alison. I'm also joined by Alex. Please say hello, Alex.
Hi, good morning everyone. I'm Alex Bedford, Risk Proposition Manager at Zurich Municipal. I've been a risk professional for about 17 years now, both with Zurich Municipal and also, like Ali, I spent 7 years as the head of performance and risk at a unitary authority. And interestingly, at that time, I actually sat in a team called Commercial Services alongside procurement, among other functions. So really pleased to be here this morning discussing how integral risk management is to successful organisations and successful procurements.
Brilliant. Thank you very much, Alex. We've also got Rod from Zurich. Rod.
Morning. Hi, I'm Rod Penman, Head of Public Services at Zurich Municipal. Zurich Municipal, or ZM as we're known, are a major player in the public sector insurance market. And in my role, I'm responsible for all things local authority and also central government. I've also got a second role within the company, and that's around the procurement process and making sure that all our people are comfortable with their role in the procurement process. And I've got a responsibility to make sure that Zurich Municipal are a good tenderer. So all my career has been spent in the public sector arena as well. And if you add Ali and Alex together, I'm afraid I've got longer years than that, although I only look 20, but obviously. Thank you.
The brutality of having to do these on video calls. Sorry, Rod. We're on to. We've also we have Gavin, who's from our partners YPO. Hi, Gavin.
Hi, Ed. Gavin Remington, Head of Public Sector at YPO. So we have a number of procurement solutions that support our public sector customers in relation to insurance and risk management. We're keen to work with key suppliers during these unique times to provide help and support. I'll go into a little bit more detail shortly about who YPO are.
Great, thank you very much, Gavin. We've also got you, our wonderful audience, and we would like to keep this webinar interactive. So do please get involved and share your opinions and ask any questions using the comment section below. We'll try and get through as many questions as we can by the end of the webinar. And just want to point out that the webinar is available on demand from tomorrow. This is a webinar about collaboration, so do share with colleagues beyond procurement, in particular insurance, risk or service managers, as this will be key to them as the webinar unfolds. You can also rewatch anything you missed, particularly if you've been disturbed by children, pets, Rod, or unruly housemates. But kicking off the discussion, we have Gavin. Over to you, Gavin.
Thanks, Ed. So just a few slides. I'm very conscious that there'll be a number of people joining who might not be familiar with YPO, so I'll just give a quick background as to who we are. So we're a formally constituted public sector buying organisation. We were established in 1974, although you can trace our roots back a lot longer than that. We're owned by 13 local authorities. So we're owned by the local authorities in Yorkshire and Humber in the northwest. A lot of people, especially if you've got friends or family, will be familiar as a YPO as an educational resource supplier. We're based in Wakefield from 2 warehouses and distribution centres and offices, just both off the M1. But we offer a nationwide coverage. In terms of the area of the business that I look after, which is the wider public sector, We have over 100 public sector framework contracts. Also, as an organisation, we established in 2014 a limited company, so we could sell to organisations outside of the public sector, mainly in the early years in care home settings. We also export globally as well some of our products. So, as I've mentioned, people will be familiar with pens and paper and furniture and food from YPO. In terms of scale, we turn over £1 billion. We have a number of procurement solutions and frameworks that cover everything from gas and electricity in the energy sector, HR solutions, temporary labour, apprenticeships, ICT contracts, facilities management, and obviously, as we're going to be covering today, insurance and risk management. In terms of employment, we're proud to say that we employ over 500 people in the public sector. In terms of our customer base, I'll keep it fairly short, but the area that I look after, the framework solutions, we operate across the public sector in local authorities, education. We have a large presence with emergency services, police forces and fire brigades, health and social care, housing, and also wider public sector, including a number of large central government customers. In terms of resources and supplies, again, we are predominantly known in the educational services environment, although we do provide resources and supplies across all the other categories that the framework services practice supports. As a collaborator, as a public sector organisation, it's really important. Our suppliers are really important to us, hence why we've got events like today. We've got large global suppliers in our supply chain, UK-based ones, regional, local, small, and actually a number in our services in the catalogue in terms of voluntary sector, which we're very, very proud of. I think today you're going to hopefully see a little bit around how YPO operate and can support organisations through collaborative partnerships. We like to work with suppliers and customers around thought leadership, what's happening in the market, and ultimately the aim is to provide quality outputs for our public sector customers. So that's a little bit of a run through of who YPO are, Ed. I don't want to take up any more time, so I'm back to you and the panel of experts we've got.
Thanks very much, Kevin. Absolutely. So kicking off, we're going to have Ali and Rod giving us a flavour of the insurance market in these post or current pandemic times. So over to you, Ali.
Okay, thank you very much, Ed. And I'm just getting my slides up. Okay, so I think the first thing I'd like to say is that the insurance market is currently in a hardening state, and that means that we're seeing premiums increasing. It's really important to remember that this began back in 2018, and it's not directly linked to the coronavirus pandemic. The insurance market operates on a cyclical basis rather than linear. So that means that we don't see annual inflationary increases like we do in other industries, but we see peaks and troughs which appear over time. The last hard market was back in 2001, 2002, and we all thought that was bad. Rod and I certainly remember that, Alex. I'm sure you do as well. Current indications are that the hard market we're facing at the moment is going to be deeper and to last longer than the last dip we saw. The basic principles of insurance is that premiums of the many pay for the losses of the few, and the market hardens in general terms when there's not enough money being collected in premiums to pay for losses, but there are some other factors as well. And I'm going to take you through a few of those. So 2017 was the costliest year on record for natural catastrophic events. If anyone can cast their mind back to 2017 and remember the world pre-pandemic, some of the things that we faced back in 2017 were hurricanes Harvey, Irma and Maria. There were earthquakes in Mexico, and there were major flooding events in China, India and Sierra Leone. That's just a few of the major events which would have had an impact on the worldwide insurance market. Also, claim settlements generally are getting larger, and I would imagine that's something Rod would like to speak about a little later, so I won't go into too much detail about that. But as well as paying out more, insurers are facing the prospect of being able to earn less premium interest on premium income. So that's a challenge which insurers are facing with reduced interest rates. Finally, we're also seeing reduced capacity. Insurers are having to be much more picky about where they place their capacity, which risks they're willing to write, and we have seen shrinkage in the market. So reduced capacity means less competition, and that means premiums going up. So back in 2018, when we started to see the first signs of the market hardening, the first lines of business which were affected are those which we call professional lines. So that's professional indemnity, directors and officers, and also crime. Pressure on these classes of business, despite this starting 2 years ago, is still growing. And at the moment, we're seeing average increases, and I do emphasise the word average, of 30-35%, but in some high-risk industry sectors, we are seeing increases of up to 300-400%. So please don't quote me on that average figure. Motor and casualty joined the party in 2019, and we started to see rate increases there, predominantly linked to high claims inflation. And in more recent times, property rates have increased as well. That started to show, particularly in the public sector market, at the back end of 2019, early 2020. None of this takes into account the potential impact of COVID-19 and also Brexit. And at the moment, we don't know what those impacts are going to be. All of this is very uncertain. But I just wanted to put the current market into the context of some of the headwinds that we're facing. So what does this mean for premiums, and what does this mean for insurance buyers? The insurance industry has so far reacted by strictly interpreting and imposing policy terms and conditions. We're not seeing a knee-jerk reaction with regards to premiums. We're not seeing prices suddenly go up as a result of the pandemic. But we do expect there to be some further pressure on premiums for some time to come. Many insurers are looking to streamline their wordings and exclusions in relation to COVID-19, and in some cases, all communicable diseases are being imposed on policyholders. The UK insurance market is also trying to tighten up its position in relation to cyber cover, which is another area of big risk. And we're seeing a whole raft of exclusions come into policies in relation to cyber exposure. Whilst the word exclusion suggests that cover is being limited, actually what's happening on the cyber market is that the cover is simply being correctly interpreted. Insurers are definitely being more fussy about the risks they write. Tighter risk standards are being imposed, insureds are being asked to provide more detail at inception, and underwriters are asking more questions than ever before. As brokers, we would recommend that everyone sets aside more time for insurance placement, whether it's a tender or simply the annual renewal process, and it's only going to get more complicated. The final point that I'd like to make before passing over to Rod is that whilst all of this is doom and gloom, you can see from the graphic on my slide that we still haven't got back to the premium rates which many organisations were paying back in 2001 at the end of the last hard market. So really what we're seeing at the moment is a normalisation of the rates for a more sustainable future in relation to insurance premiums and coverage. Rod.
Thanks, Ali. And I think I pretty much agree with the assessment of the current state of the market that you've just worked through. And, you know, from an insurer's perspective, normally I would wear a jacket because I would have no shirt on my back because we paid out so much in claims. But from an insurer's perspective, and all those things being equal, as Alison just said, many customers are paying pretty close to the same premium that they were paying 10 years ago. And I think what we are seeing is a normalisation of the market, and we've got COVID. And we've got Brexit still to be factored in as well. And it was interesting that that Ali brought up property, because property's always been a relatively consistent area. Casualty and motor and the professional lines, as Ali said, they tend to be to go up and down, but property's been relatively constant. What we've seen over the last 18 months or so is the cost of total losses. You know, when a whole building has been lost, the average losses have gone up by just under 7%. But for partial losses, it's 11%. And for the most part, the inflationary increase on a property policy is just generally average weekly earnings. So there's a big disparity because that's been run at maybe 2 or 3%. And that's why, certainly in our sector of the market, why pricing is beginning to go up. We just need to keep pace with inflation. Brexit, as I mentioned, is another interesting era, especially in the public sector where we operate, because whatever happens on Brexit, local authorities will be at the centre of it. That they will have to continue to provide services and so on. And if it comes out as is widely predicted, more people will fall into poverty, therefore will require the services of a local authority. Therefore, it begins to add risk for us. COVID, as has been highlighted, is obviously a big area. And one thing I would add to Alison's comments is we don't know yet what claims management companies are going to do. You know, the ambulance chasers, as people talk about, and you know, when you think of some of the debates going on at the moment as to whose fault is it as to you know, in various areas. Where will claims management companies go with that? So that's something that we need to see play out. And I also agree that insurers are requiring more detail and more quality information, and I would encourage people to tell their story, especially in the riskier areas. Alex is going to talk about risk management in a lot more detail in a few minutes, but I would encourage everyone to talk to their insurers about how you think the risks associated with your organisation may change. And just to give a little bit of, or bring a little bit of life to it, I was speaking to a local authority chief exec recently, and they were telling us that when they come back to the office after the COVID, they currently have 5 major offices that they work from. They will only go back to 2. So there's all sorts of questions that begins to raise. What happens to the other 3 offices? What additional risks are we going to be faced with? My mind drifts into things like, if we've got lots of people working at home, do we end up with alternative filing systems at home? And there's GDPR issues around that what data do people keep at home that would normally be probably safer in an office? So my message would be, tell your story, don't hide problems. Explain if you have a problem, explain what it is and what risk management you applied. But most importantly, what was the effect of that risk management? And that's how you'll get the best terms as we go through a hard market. Thank you.
So, Alex, thank you very much, Rod and Ali. That is a sort of a slightly terrifying picture. But I'm sure we can navigate this, certainly with the help of Alex, who's going to talk about some of the risk management and what lessons we've learned over the last 4 months. Over to you, Alex.
Thank you. So I think at first, I just wanted to talk about risk management itself as a process, because in some areas it has a bit of a reputation as a bit of a dry process. People do a risk register once a year, put it on the shelf, never look at it again. But actually, through this crisis, so through the last few months, the risk management process has been front and centre of decision making. It's had to be. People have had to increase their risk appetite and be taking decisions based on balance. And the importance of strong evidence-based and dynamic management of risk has been a really consistent theme that we've been emphasising to our customers and working on with our customers. So as Rod said, so risks have increased. That was pretty evident. But actually that ongoing conversation about how people were managing the risks and how they could evidence that for the future, as much as currently, has been really important. But the point around that is that this shouldn't have just been a crisis response. Actually, a mature organisation and a successful organisation should have integrated that kind of dynamic risk management, decision-making based risk management into business as usual, not just a risk register on the shelf, but actually every decision has some evidence of the risk assessment that's happened behind it. So the profile of risk management has never been higher, actually. And when I think about how that relates to procurement, and particularly in the case of insurance, but many other procurements, what you're looking to do through procurement is transfer an element of risk to another organisation. But before that transfer takes place, the risk will have been assessed and managed by the risk manager, the insurance manager, the service manager, And actually, if the procurement team, or the person who will be carrying out that procurement, is involved in those discussions, or can look back over those discussions and really understand which bits we're retaining, which bits we want to transfer, what our plans are around mitigation, they will be better able to procure effectively. Actually, through this crisis, we have seen examples of where that hasn't been the case. They've actually procured for a risk that was slightly different. So some of the PPE procurements that we've heard about, where the wrong type of PPE has been procured for workplaces, because there are lots of different types, and actually understanding the risk to your own organisation, not just the generic risk, is really important, and would have stopped some of those failed procurements happening. You can't outsource understanding of your organisational aims, your unique risks. Actually, as a procurement professional, understanding what they are should be the cornerstone of what you're doing. If you procure the wrong thing because your ask didn't actually reflect the risk that you're trying to mitigate, it will inevitably lead to more risk and more cost down the line in most circumstances. And equally, I think there's the procurement the procurement and the risk management that's going on across your organisations, but also using the risk management process to risk assess your own projects and procurement, looking at the risks of the market or lack of a market in some circumstances, the risks of too rigid an offering versus the benefits of flexibility, social value opportunities, and so on. So actually risk assessing and using the risk management process through your own work. A good example of where a risk assessment had taken place and was underpinning procurement that we've come across recently was for a very large organisation that had a very ambitious plan for the next few years, with acquisitions and mergers in the pipeline and consolidation of assets. There was going to be an awful lot of change, essentially, sort of over the next 1 to 5 years. And the tendering organisations, including ourselves, had to demonstrate how we could and would respond and flex our offering still within the sort of parameters of a long-term agreement, so that we weren't having to they weren't having to keep coming back to the market, that actually within the current arrangements we could respond. And actually the discussions that then we had with that organisation has led to a really strong relationship between us as the supplier and them as the customer, because we've got mutual understanding of those plans. We're not getting surprises. They have some idea of how we're going to react to what they're going to do. So actually identifying those areas and using them and being very vocal about them with your suppliers will lead you to a better outcome. And the final part, I think, that we've learned about this process through this process about risk management is just how important, and again, it's been touched on, talking to your suppliers about any new risks or different risks that emerge through your operations, talking about it to your suppliers, being upfront with risk carriers such as your insurers, as one, prevention is always better than response. So actually getting support with how you're managing any new and emerging risks from those suppliers who can help you with that will be better in the long term. We've had instances of customers and suppliers coming to us with some really weird and wonderful risks, actually. So universities who want to move to online teaching, but some of them are practical courses, Bunsen burners, scalpels, etc., in people's homes. It's a very different risk to on university premises. But in order to carry on operating, there are certain things that we will have to flex around. So what can we do to support them using risk management to try and allow some of these things to be carried out? We're within Zurich Municipal, we've got a large in-house risk management consultancy, so we can give bespoke advice to those customers very quickly, get back to customers quickly rather than having to sort of go and source it elsewhere. And I can't talk about the last few months without talking about organisational resilience. I think it has to be acknowledged that in a lot of cases, organisational resilience has not been as robust as it should have been in many cases. And it's a really key risk area for any organisation, their sort of resilience plans. we had customers and suppliers who simply were not set up for a mass move to working from home. They had sort of teams still working on desktops, even though their response plans relied on a working from home capacity. So as procurement professionals, I would be really interested to hear whether you knew what was in your organisational response plans, whether you had been involved in the process of putting those together and testing them, or whether the first you were aware of them was when you were asked to procure things as the plans activated, which again comes down to visibility of risk. So talking to suppliers about scenarios and how they may be able to support you to strengthen the plans and make you better able to respond. And again, been touched on, but a great example of this, which isn't corona related, but is a good example, is if you lost a key building to a major fire or a major flood, how would your insurer support your response? Do you know actually in detail what they would be able to supply to you? Have you ever had that conversation with them? Does it have a supply chain of its own that you could draw on to get back to business as quickly as possible, or would you just be waiting for the financial payouts that would enable you to go and source things yourselves? So one of the lessons for organisational resilience through this crisis has been that organisations have really found out whether their supply chains are a series of just contractual arrangements, inflexible, or whether they've got real relationships with their suppliers that have enabled more flexible responses. And the final point I'd like to make is that sustainability is important. That's become starkly evident over the last few months. It is the risk area going forward. And it doesn't just mean climate change. In terms of future risk and reset that many organisations are now looking to, sustainability does mean that carbon footprint, that climate sustainability, but also workforce sustainability, technological sustainability. And procurement and supply chain can play a really big part in this agenda. So again, another question, how are you considering the sustainability of your contracts and your suppliers? So we in Zurich have got a sustainable sourcing programme, but we're looking at strengthening this because this is an area that everyone is learning at the same time, I think, and it's moving so quickly. But when organisations are considering things like carbon impact, they need to include their supply chain in those considerations. So ensuring that you're procuring from and partnering with suppliers who can support you in your sustainability plans is important. The public are terribly aware of this agenda, and reputations will be won and lost on it, I think, in the future. So really putting sustainability at the heart of what you're doing will be a key risk mitigation going forward. Thank you.
Thank you, Alex. Some great and interesting observations. I did want to ask you a question about the example you used about the large organisation that you pinpointed, where you were working on a long-term arrangement. Was that organised? You said how resilient, because you had good dialogue, how resilient that has been. Was that arrangement discussion all done pre-COVID, and then? Yes. And then it was put under pressure and under test straight away.
Yeah, I think we have had a number of organisations, well, because of when COVID hit, and a lot of our customers' dates, so inception dates are 1st of April. So there were an awful lot of arrangements that were put in place back end of last year, beginning of this year, that yes, we've had to respond. And as I say, we've had all kinds of weird requests and queries about the way people are working. And without that knowledge of an organisational culture and what they've got in place, and we're getting that knowledge very quickly, it would be very difficult to respond in that bespoke way. There's an awful lot of generic advice out there, and we've issued generic advice ourselves. But that relationship between the key contacts has been critical through this.
One of the issues with the generic info, Alex, and I'm sure you found this, was that it became out of date very, very quickly. And the need to move and keep up to date with the government advice and the Public Health England advice that was coming out was really challenging for all organisations. As brokers, we were sort of in the middle. We were getting a huge amount of questions from our clients, and we were trying to make sure that insurers were keeping up to date with the changes that were being faced by the sector, and how the service delivery would change, and the needs and calls upon policies would change. Most local authorities, and I'm focusing specifically on local authorities rather than other public sector organisations here, but most local authorities have always had responsibilities and powers to do things which they haven't necessarily had to do until we faced a disaster, we faced a serious situation. So that's been really challenging, making sure that insurers actually understand the full range of services that a local authority has the potential to provide.
And so, Alex, you touched on it. You touched on it in your presentation, talking about the importance of talking to your external partners, but it's also internal partners, and making sure that the procurement people are involved in developing the risk management strategies and things like that. Ali, in your experience as broking insurance deals, does this happen a lot?
It varies from organisation to organisation. I think that's a fair point, and I'm sure that will resonate with Rod. It's really challenging. We would always like to start any procurement exercise as early as possible. It's one of our colleagues in this sector always says, it's coming. It's coming at the point at which you put the last long-term agreement in place. So if that's 5 years, you've got 5 years notice. So don't leave it to the last 3 months to start thinking about your procurement exercise. And lining up the key stakeholders internally is really important. It's really key to have somebody from procurement involved at the earliest stage. The insurance market doesn't work like other markets, and whatever process is designed needs to be designed to get the best from the market and the right desired outcomes. And if the procuring organisation doesn't put enough groundwork in, they're not necessarily going to get the right result. And it doesn't matter how many times we have that conversation, we do need the commitment and buy-in from the organisation. It's quite challenging to get organisations also to think about it as an opportunity to reset their strategy too. Too many times we see local authorities just wanting to procure the same again, rather than actually take the opportunity to really think about their approach to insurance and risk management. Really, the full range of services they want their insurance provider to deliver, and how they want those services to deliver. The focus is always on the policy wording, but there's so much more that an insurer can do to enhance the risk and insurance requirements of a public sector organisation. I think that's really important.
I would agree with that totally, Alison. And it's a big sense of frustration as a major supplier in the area that early engagement often doesn't happen, and then when once we get into a process, it is very much just about the insurance and risk contract that's about to expire. We just want more of the same. And where we would love people to get involved is, I talked a lot, and Alex touched on it as well, about the understanding your organisational aims and how can you get the insurer to support you in that. And very often insurers will provide additional services as part of their proposition using their supply chains to help. A very simple one would be, Alex talked about a major loss of a building. You can actually prepare for that if you've got key buildings, to work with the insurer and their suppliers, that if something happens at that building, how will we deal with it? And so we get a lot of detailed information. For us, we use porter cabin, and that we would plan out a loss and what key things need to happen for the organisation involved, and how can we provide them early. And to give an example of that, for local authorities, huge events are often school fires, and often the school could be out of action for 12 months, 24 months, if it's a significant loss. But if you plan it out beforehand, where can you put a temporary building? Often on the school playing fields and things like that. What are the key aspects that you would need? You can get it up and running within months, and that's got a colossal saving to the customer, because they don't have to bus children around. Parents in the region don't have to drive their kids to alternative schools. So it's a huge community impact, and the insurer can impact positively on that, which benefits the organisation. But it's all about the early engagement and understanding what is it that's needed.
Ed, and I think that sort of it might appear to some people quite daunting to start on that journey of early engagement, but it's something here at YPO we've got experience with our category team. So you know how you can start that very early on and do that hard work. Because I think Alex, Ali, and Rod have all said, get in early, work early, do the hard work up front. It may appear daunting with public sector regulations, how you can do that, etc. But here at YPO, we've guided a number of customers through that maze and supported them. So it's not all done in that last 3 months. It's done a lot further out.
Well, and all of these issues that you're talking about, when it goes wrong, are incredibly costly and damaging to businesses and could floor businesses. So it does beg the question that can and should procurement, risk and insurance maybe perhaps think about using this pandemic to force a seat on the board in an executive role. What's your feeling on that, Alex?
So you absolutely have to have a relationship with your board. So when I was at my authority, I had regular one-to-ones with my chief exec who just said, if you think it's an issue and you've got the evidence, come to me and we'll get it sorted, and we got stuff moving. So you absolutely, and again, that's very daunting. And then but having that relationship directly into the key decision makers in your organisation, I think is critical, because they will come to you at times like this. And actually, we've got real opportunity here, because I no doubt they will have come to you during this time looking for you to support the organisation. So it's about capitalising on that now. They should have seen your value and your worth as risk, insurance and procurement managers. So how do you maintain that? Working with them, keeping talking to them. And actually, the first thing would be about rebuilding probably your response plans in the new risk environment that you're currently in. And that would take all your senior leaders would need to be engaged with that and supportive of that. And they'll all have plans in their head. As Rod said, chief execs thinking about closing offices. Probably not everybody in the organisation knows that yet. But thinking into the future and the kinds of recovery plans. So things will have to really change, and embedding that in with the processes that we've been talking about. It feels like a really great opportunity for those who want that seat at the board and those conversations at that senior level to capitalise on them at the moment.
Yeah, I would agree with that, and that go proactive rather than be reactive. And if you understand your organisational goals, then get involved, because procurement and also the insurance and risk manager, they've got a role to play, and they can help. But often, we see reactivity rather than actually, getting involved. Waiting to be asked rather than going with a potential solution. And often, as we said before, you can use your insurer to support that.
I think it's, I'd mirror everything that both Rod and Alex have said. I think, insurance as one of the support services to a local authority is so often overlooked and forgotten, but it's so important and integral to everything the authority does, as is the risk strategy. And, time and time again, we get that 4:45 phone call on a Friday because some major change is happening. A building's been purchased and it completed at lunchtime today. And I can see Alex smiling. We've all been there. We've all faced these calls. And, a building's completed, the purchase of a building's completed. Nobody's told the insurance team, and it needs to be put on cover, and it needs to be put on cover now. Oh, and by the way, the sum insured's 200 million. That's just one example. And these things are really important. So actually making sure that the insurance and risk team are given the importance they deserve, and that procurement is respected in relation to insurance and risk, I think is so important. The flexibility that Alex mentioned earlier on is key as well, because if you've built the flexibility in, the ability for the insurance programme to respond when you are facing either a catastrophic event or an emergency situation like the property purchase I've just explained, the insurer then comes into their fore. And
so, Gavin, a lot of this comes down to collaboration. And is it even before things go out to tender? Is that how you like to operate in your side of the business?
Yeah, I mean, I think that's what YPO, a term I get accused of saying a lot is collaboration in every meeting, and working with customers and suppliers. That is what YPO is about. We're a collaboration of 13 local authorities, and I think it was touched on earlier by Rod that understand your objectives, come speak to YPO. We'll help navigate what might be seen as a bit of the market in terms of regulations. But it's really essential. We can't stress enough that think about it early on, driven by objectives and outcomes you want, and the approach to procurement will fall into place. We have a number of solutions that can help with that. But yes, definitely come speak to us, because we've worked with other local authorities that have done that, so we can talk you through that approach, if that makes sense.
Absolutely.
It does, and sorry, can I just add to that as well that when the tender comes to the supplier or whatever, and that it's been well thought out, it helps really engage, and Ali's one of Ali's roles, and also the people who work for me, are to make sure we can engage our underwriters and make them feel part of the process. And the more information you can give an underwriter, the better. And so involve them in the discussions, and when they've got questions, make sure you answer them. Because if an underwriter's got to guess, you can take it as read they're going to guess high rather than low. So, so the more that you can articulate what you are trying to achieve, and here's the information that supports that, that's how you will get best terms from an underwriter.
Just one final point. At the moment, all public sector organisations are going to be facing huge budget pressure. We're hearing about the issues that local authorities are going to be facing in the next few years every day, and it's really worrying. And they're going to be making some really challenging decisions. But nothing makes my heart sink more than when I speak to a procurement officer or an insurance officer and ask them what their primary objective is from the insurance tender, and they tell me it's to save money. It should be about having the right cover, the right service, and the right partner. And that's really important.
And that's something that's going to be, well, with a hardening market in any case, accelerated by COVID, that's something that's going to be even tougher. I mean, I know, Rod, you talked about this often. It's about the value you're getting rather than the cost. How are you going to convince CEOs to look beyond the expenditure?
Mm-hmm. Well, I think it's about helping them understand what is it they're evaluating, and there's one of the scenarios that plays out quite a lot. That in many cases, the biggest insurer of local government risks in the UK is local government itself. That they all carry significant self-insurance programs, and very often in a insurance tender, they'll evaluate the premium, but spend less time on things like who's handling their claims and what's the experience and how do they manage the claims, because they're spending the local authorities' money. And if you take a simple example, that a casualty policy, public liability policy, where the premium might be £300,000. A 5% increase on that would be a relatively small amount. However, they could be managing an insurance fund of £5 million. And if you select the wrong claims handler as part of the programme, and you end up paying 5% more on the claims, that amount is more than the premium. But all too often, the evaluation is about the premium, and there's less time and taken to actually understand where you could make bigger savings if you want, or pay less out. And that would be by, as Alison said, by choosing the right partner to support you in that. But all too often, the headline insurance premium becomes the big issue. And of course, when we talk in the press, it's all about premiums, premium. When in fact, what you need to be doing is understand what we call the total cost of risk, and so it's all the hidden bits. And how do you actually make sure that you evaluate them and get the best possible deal there? Because often it will outweigh the premium.
And that feels like that's where procurement has a key role to play. Sorry, Ali, go.
I was just going to say it's also worth remembering that, whilst the public sector procures insurance for their own purposes, all of their suppliers procure insurance as well. And insurance will make up a cost of all contracts. Most procurement exercises stipulate requirements for insurance, and some sectors, Gavin mentioned the care sector earlier on, and the care sector in particular is facing quite a challenge with regards to accessibility of insurance cover. We're seeing the types of exclusions that I mentioned earlier on around all communicable diseases. And communicable diseases have never been a problem in care homes until the current scenario. So why insurers now are seeking using the situation as an opportunity to carve out all communicable diseases cover is beyond me. We think that it's a knee-jerk reaction and the market will settle. But I just want to sort of give everyone a heads up that actually insurance costs could increase all contract values. So it is wider than just the insurance program that that's being purchased for the organisation themselves.
And Alex, on that point of the problems that care homes are facing at the moment with finding policies that actually cover what might be a knee-jerk reaction, but it's certainly a problem they're having right now. I remember you were talking about how insurance should be actually it's the fourth level of risk management. Is that right?
Yeah, well, so there's a risk management cycle if we get technical about risk. So identify, assess, and then you choose your responses. So you can treat it, so put in all your risk management measures, essentially. You can stop doing some things, which I know some frontline services have either been stopped or they've stopped doing it in a way that meant there was contact with vulnerable users. So things like doorstep deliveries rather than going to people's houses. So you can stop things. And transfer is just you try. Our advice and my advice as the risk manager would be you manage as much as you can. You put all those things in place, and then you insure for the bits that you can't afford to manage, but you don't have the capability to manage, etc. So you're transferring either to insurance or to a third-party supplier if it's something else. But you're transferring those bits that make sense. To put out outside of the organisation because you can't afford to do it yourself or you don't have the capability. But all that other risk management needs to come first. And so with care homes, they will have had their own response plans. They'll have their own procurement teams sometimes, and they'll have ways in which they have risk assessed the different activities they do. There's also lots and lots, as with everything else, loads of advice from the different regulatory bodies, so Public Health England, at the HSE, that supports them in the way in which they manage risk. And it's the same for all frontline services, really, that are where you've got contact with vulnerable people. So that risk management, the way to get the best possible transfer solution would be to have the best possible risk management in place in the first place, evidenced that you can then share with those suppliers who are available to you, so that they can get comfort and confidence in what you're doing. So they are only insuring for the bits when it really goes wrong, despite everything that you've put in place.
Great. And when it comes, Ali, you mentioned the focus that's required on outcomes, not processes. And when we're in a lot of public sector organisations, there's an awful lot of process that people have to go through, especially with public funds available. How can you help people sort of cut through that and focus on the outcomes whilst going through the required processes or the bare minimum of the processes required?
Yeah, I mean, the process needs to be respected, but it shouldn't be process over outcome. Absolutely shouldn't. It's starting early and teasing out what the desired outcomes are is the key thing. So if you have those conversations, make sure you engage the correct stakeholders within the organisation at the earliest possible time to make sure that everybody's views are heard and that you design a process and an outcome that fulfills the requirements, ticks the compliance boxes, and also delivers the desired outcome from a sort of service delivery perspective. But having a plan and really looking at the strategic opportunity that you're presented with is the most important thing, and getting views from the widest possible group.
Yeah, for me, the starting point shouldn't be the process. The starting point should be, right, what do we want to achieve from this tender? And then you build the process around that. But, certainly in the public sector, we have got a prescribed set of rules that we have to deal with. And the tenderers, the suppliers are as familiar with them as the customers are. But it's where the whole thing becomes about not getting a challenge. And we do see that where that's the primary focus, is to make sure you get through the process without a challenge. And when we get to the end of a process, often we'll find a situation where we don't understand the result, but you accept it. But we will ask questions, and that is perceived as a challenge, and it's not a challenge. That what we're trying to do is understand how we were evaluated and things like that. I mean, I just can't envisage a situation where we would sue a customer to place business with us. That would just be a wholly preposterous situation to get into. But sometimes you need to understand it. But you're kept at arm's length. Whereas if it was an outcome-based process, that sort of scenario wouldn't happen. And sorry, Alan.
I was just going to say, one of the things that's disappeared from insurance procurement is the ability to have a presentation. And I know how difficult and what challenges scoring a presentation bring from a procurement perspective. But I completely agree with Rod. It's really disappointing when an organisation hasn't had the ability to demonstrate how they're going to add value. So that's something I think really we as an industry need to look at, perhaps with support from Gavin and his colleagues, because I do think that adds value to the process and enables purchasers and procurement teams to really understand how they're going to work with a partner organisation once they've made a decision.
Well, one of the best examples of that I've ever come across was a few years ago. A local authority did do the presentation that Alison's talking about. So they shortlisted suppliers once they got the submissions in. But rather than bring the suppliers to them, they went to the suppliers, and they got the suppliers in their offices to do a presentation. And in our case, it was in the office that would handle the claims. And so we did a presentation, and of course, you can say what you want in a presentation, can't you? When the presentation finished, said, right, can we go and talk to your claims handlers now? We want to see that in evidence. And that was brilliant. And we weren't expecting it. And fortunately, on that occasion, our claims handlers came through for us. But it was absolutely brilliant the way that they did it. And not everybody can do that. I understand that. But it was really, really effective procurement.
I bet that got them heart rates racing.
It certainly did. It certainly did.
Alex, we've had a question in for you from Jamie. Jamie has asked, what would be the risk considerations for implementing more sustainable supply chains?
So there are sustainability sit to us, and I think in the past, certainly in the last couple of years, sustainability has been all about climate. So it would be about the green credentials of an organisation, which is as good a start point as anything. For example, going forward, if you've got a choice between two fleet suppliers, one has a large electric component, one still has a lot of diesel, would be a big impact on your carbon imprint if you went with the diesel. Kind of looking at the green credentials, who their key investors are, who their key partners are on the climate side would be the first thing. But sustainability has come to mean much more than that. So the workforce side of things, so flexibility of workforce. There's big scrutiny at the moment around sort of gender pay gaps, D&I pay gaps. Diversity pay gaps, shouldn't use jargon. So just sort of researching the organisation and looking at whether what they are doing on workforce sustainability marries with the ethos and values that you're putting into your own organisation. And then the last area that we look at with sustainability is technology. So I'm whistling through this because I could talk for days on it. But the last thing is around technology. So having future-proofed solutions for you, essentially. So we've all learned now being able to work remotely is critical. And we were fortunate, I would say well prepared, that we as an organisation, so Zurich as an organisation, within a matter of days had 5,000 people working from home, and business as usual, really. And we've had a lot of really great customer feedback on that. So we did have the technological capability to do that. We've also got things like we have a Zurich Risk Advisor app, it's called, which is available to all customers, which allows remote property surveys to be carried out so that you could continue surveying properties even when our surveyors have been on the road. So that kind of app-based, again, future-proofed capability around sustainability. So is the way in which they're going to deliver to you sustainable and aligned to how you want to work? If your people are all suddenly working from home, have you got the right supply chain to service that, or are they very inflexible about where they can deliver to, etc.? So yeah, very briefly, those are sort of the three areas we look at. So what impact they're having on your climate credentials, the technological capability for the future, and also how they work with their own workforce. The three areas that we particularly highlight at the moment.
It does sound a bit like we could do a whole other webinar on that.
Yeah.
It's just, thank you very much for being so succinct. Okay, a question each for the panel. If we can go round in turn, from the fallout of the pandemic, they're very different things. What's been the one biggest change to fall out of the pandemic for you? Rod, what would you say has been the one biggest change?
Well, if I bring it into the specifics of what we're talking about, one of the biggest changes we've seen is government emergency legislation has meant that many public sector organisations have actually extended their current arrangements rather than go to tender, and that's something new that we've had to deal with. The sting in the tail is we've now got a heck of a lot more tenders next year and in 2022 because that's it's just moved it on a bit for us. And the other bit for me is we're a direct dealing insurer, and whilst our sales and claims employees have a lot of customer contact at all times, our underwriters have now had this increased contact with their customers, and using Teams and Zoom and things like that the relationships have really built. Which is a really good thing because it means that customers and underwriters are talking quite directly to each other and solving problems on the spot rather than having to go through a chain and so on. And it's happened by accident, probably. I would say, but it's been a fundamental change and one for the good.
That's a positive note. But Gavin, it sounds like you're going to be having a busy time over the next few years if Rod's right. So what's been your biggest change?
Yeah, I think it's, if I can, Ed, I'll just mention two. I think Alex made a really good point around risk management becoming on the top tier at the table. And I think that's been driven by a lot of command meetings. So I attend a daily command meeting here at YPO with the board of directors and the key heads of service. And I think that's been really useful. It happens every day and we have a set agenda, but it's really about managing risk, a lot of that. So I think that's a real positive. I think the other thing we've touched on is you can't get away from technology. The current situation has revolutionised how we all work. Technology, maybe things that we felt we couldn't do remotely, we can do now. That brings challenges. We've already touched on children and pets, etc. But I think, an example here, within an hour of YPO making a decision to send staff home to work, sort of back end of March, within about an hour and a half, I had 40 staff all set up working from home and didn't really miss a beat. So I think that's been something that's just going to carry on.
It's interesting. It's transcending sectors, that observation, isn't it? Everybody's feeling that. Obviously, not manufacturing and places like that, but a lot of sectors are feeling that. Alex, For you, what's been the one biggest change for you?
Mine, it comes back to the point that was made earlier about this. We can make decisions quite quickly, and they're often the right decisions as long as we've had the right people in the room talking about them. So agile governance, and particularly in the public sector and in a big Swiss insurer, decisions can take a while, terribly risk averse, need to go through the committees. And actually a lot of decisions, very fundamental decisions, have been taken very quickly and they've been right. So just how we take that learning, that actually we probably overmanage a lot of risks because we just always have done. So resetting organisations in a way that means that governance doesn't become the be all and end all would be a key thing I'd like to see.
So it's added agility as well. So Ali, finally, wrap us up.
Well, very similar. The need for flexibility, or the need to respond to changing environment rapidly, has been such a key and important issue. And I think on the whole, the insurance market has done a reasonable job. Different insurers have responded in different ways. And as brokers, our role is to pull all of that together and make sure that our clients have the information they need to carry on providing the services that they provide. I feel that I'm really the bringer of doom and gloom, because we've spoken about cyber and the fact that most organisations did transition reasonably well, as did the cyber criminals. And I believe that cyber crime is up approximately 33% during this period. So that's not necessarily something I've learnt or something that I have been affected by, but I think it's just another issue that is going to fundamentally change the way that we work and operate. Better governance around cyber resilience, and I think we've got a long way to go in the learning around some of those issues. Sounds like that's going to keep you busy, Alex, over the next few years. Increased emphasis around the cyber risk. So but thank you very much indeed for our panel for such a great and obviously collaborative discussions. It's been fantastic. We've touched on children, pets and Bunsen burners. So that's a very heady mix. To anyone asking, the webinar will be available on demand shortly. You can share it with colleagues, re-watch at your leisure. And we've covered a lot of ground relevant not only to procurement professionals, so do please pass on to those working in risk, service and insurance management within your organisations. But I'm afraid that's all we have time for. I do hope you've enjoyed the webinar. Thank you, Alison, Alex, Rod and Gavin for taking part and sharing your expertise. And thank you very much for tuning in, and have a great day. Bye-bye.
Thank you.